Yeah. I'm just going to give a brief introduction and explain why exactly I wanted to explain this to you guys. So when I came and I realized that we don't have credit cards back in Nigeria, so the system is very different. In Nigeria, just when you have your debit card, in fact, the Nigerian system runs on cash mostly. So the Nigerian system does not even run on cards mostly. It's just cash everywhere. So it's only for a few things. Maybe if you want to buy something online, you want to recharge your car, you want to recharge your phone. That's when we use our debit card. And the American system is entirely a card system, and not even the debit card. It's entirely a credit card system. And when I came, because I read a lot, I read a lot of things. I don't take any reading for granted because I know that reading just a paragraph can save your life. So when I came and people just said, "Oh, you have to get a credit card," I'm like, "Why do I have to get a credit card if I have my debit card?" So people started explaining. They just made me realize that it is very hard to survive here if you don't have a credit card. And I'm like, okay. Then the first credit card I got, when I got so many things did not make sense to me. So I went online, I watched a lot of YouTube videos, went to websites just to know that, okay, what exactly is this card? How does it work? And at the end of the day, I was able to understand a whole lot of things. And usually, when my friends run into like one problem or the other, I'm always the one explaining this is what you should do, this is what you shouldn't do, and all of that. So today, the way I made the presentation, I don't want you to make it too formal and like an accounting kind of thing. I don't want to scare you guys away, but at the same time, I'm just going to be highlight the important things. And most importantly, what I want to say is after each slide, there is room for you to ask questions. So it's not like we finish the whole thing and then we have to start asking questions. So immediately I finish each slide. Please, we are just four here, which is very, very good. So if there's anything you don't understand, don't feel that, oh, you're pulling me back or something. I'll try as much as possible to understand the basic things you need. And as time goes on, with every information I give to you today, as you use your cards more, you'll be able to understand, oh, which is which. So I'm going to be sharing my screen now. Credit cards dissected. I'm going to be explaining the basic things you should know. I'll try as much as possible not to make it complex. It's not really that complex at the end of the day, but it's very, very important for you to know the basic things. So, first, what is a credit card and why is it different from the debit card? So, the credit card system is a buy now, pay later. So, unlike a debit card where once you have your card, you make a purchase, the money is taken directly from your bank account. The credit card is different. So usually it's like instead of paying for every single thing every time, with a credit card, you can buy everything you want within a month, and at the end of the month, you just pay everything as one single payment. So that's why it is different from a debit card. Another thing is, unlike a debit card where your account balance decreases. For instance, if you have $1,000 to start with as time progresses, as you make purchases, the money decreases. But for a credit card, because you're accumulating your purchases, so your account balance definitely it increases. So for instance, if you buy something worth $50 today and you buy another thing worth $20 tomorrow, so instead of, if it was a debit card, the money you have in your account will decrease, but because it's a credit card, your account balance increases. Another thing is there are different interests that can be accumulated if you do not make the appropriate payments. So a debit card is not that complex. Get your money, use your card to make a purchase and that's it. But for a credit card, that is different. So that means there are so many things you should know. There are so many dates and information you should know. about your credit card. Otherwise, there will be different types of interest that you can accumulate on your card. And the worst thing about this interest is it's not usually like 5%, 10% kind of interest. It's usually something, sometimes it starts from 25% kind of interest. So this is why you cannot afford not to know the basic things. And then for a debit card also, there is a limit. There is a limit to how much you can spend, just like a debit card. So for a debit card, you can have like $1,000 to start with, and as you make purchases, the money reduces. For a credit card, you are given a credit line, or what is referred to as a credit limit. So even though they tell you that, okay, you can buy so within a month and then pay at the end of the month, it's not an I don't know how to say it. It has a cap. Like, it's not like you can just buy anything. There is a credit limit, which is the maximum you can spend at a time, or even subsequently on that card. So next I'll be going to another thing why in America people prefer to use credit cards is because credit cards is generally safer for transactions. So this means that there are so many fraud cases in America, to be honest. And usually if you use your debit card and unfortunately someone is trying to impersonate you or something like that, that means all the money you have in your account will just be wiped away. Compared to a credit card where if for any reason someone steals your credit card, you can file a claim with the credit card company that, oh, so happened to my account, and any payment that have not gone through, sometimes even if the payment have gone through, but you can prove that your card was indeed stolen, those transactions will be cancelled. Even if the person has already used your card, you would not accumulate the purchase. Like, the money will not go to your own name. They'll just like cancel the transactions. If it was a debit card, usually some banks do that for debit cards too, but it's not really common. So for safer transactions, especially when you're buying things online from maybe outside the United States, or you are just buying things from a weird website in China or Korea, like anywhere far off that you're not really too sure about the safety, it is advisable to always use your credit card instead of your debit card. Then next, there are different types of credit cards, and the one you get, like, it depends on a lot of things. So there's American Express. I'm just gonna list like the common ones. The common ones for students, especially, Discover is the go-to credit card. And the reason is because for Discover, even though you are just coming into the country and you are new and you do not have what is called a credit score, I'm going to be explaining that in a while. For Discover, they can give you a credit card even though you do not have a credit score. But for other cards, it's usually very difficult to get a card if you've not been here. So for most students, their first credit card is usually Discover. And then there is MasterCard, Visa, and American Express. There is also like other cards also depending on the bank you use and where you are, but the most common ones that I know is Discover, MasterCard, Visa, and American Express. So next, I'll be talking about the most important terms. There is a lot of terms, to be honest, but I don't want you to feel overwhelmed. Just, try to understand like bit by bit. If you have any question, please do not hesitate to ask. One is what is called a credit score. So a credit score is kind of like a score that tells your credit health, I would say. So it's like one single score that can tell anyone whether you have, how do I explain this? So in America, if you want to buy a car, if you want to loan a car, for instance, like you do not have all the money to buy a car, but you want a company to give you the car and you will pay monthly, they will ask you for your credit score. A credit score gives them the idea of whether you are good with debt. Because if you pay your credit card, if you make your credit card payment on time, and all other factors I'll be explaining in a while, your credit score will be good. So usually this call, I'll be explaining in a while. So this is just to introduce you to the terms. There is a credit score, there is the credit line, or what is called the credit limit. And as I've explained before, this is just the limit given on your card. Like on your debit card, for instance, your limit is whatever is in your account, whether it's $50 or $1,000. For a credit card, you have a credit line, which is like the maximum you can go like at once to buy on the card without making any payments. I'll be explaining all those in a while. Credit line available is also different. Statement balance, current balance, minimum payment due dates, APR, which is annual percentage rate, fees and interest. So next, okay, so far, do you guys have any questions? Is there anything I said you would like to clarify? Does anyone have any questions? You can unmute yourself if you have any questions so far.
I don't have a question.
Okay, thank you, Fee. Sister Tasnim, do you have a question?
Yes, I do.
Okay.
And it is as regards you said you can accrue different interests on your credit card. And I'd just like to ask from like the Islamic point of view
Yeah.
and relating to interests, like what is your perspective?
Yeah. So I get what you're trying to ask. So the reason why I'm holding this today is it's basically just a way to, number one, a way to make all your payments so that you have zero interest. I've never made it any I've never made any single interest on my card all this while because I took my time to understand how the system works. So this is basically the reason why I said you would accrue interest is if you do not know what you're supposed to know, unknowingly, out of ignorance, you would accrue interest. So, but the main reason why I'm having these conversations with you guys is just to tell you nobody likes interest. No matter how rich you are, you don't want to pay for something you haven't bought, right? And usually the interest is like $30, 30%. So if you do not pay $1,000, by the time you pay, you'll be paying $1,300, which is a whole lot of money you did not spend. So this is why so the main conversation is just to tell you what you should know so that you never ever have to pay an interest on your credit card. Was I able to answer your question?
Okay, so to clarify,
Mhm.
using a credit card and paying at the right time does not accrue any interest at
No,
all.
no, no. You have zero interest.
Oh,
Once you make your payments when you're supposed to make it, you have zero interest.
thank you.
You're welcome. So next, I'll be talking. Amza, do you have any questions before I go further?
Yes, I don't know whether you'd be talking about this later, but how difficult is it to get a credit card
Oh,
as
okay.
a student?
Oh, okay. So as a student here, like I said, Discover is one of the cards that, whether you are coming here for the first time, Discover does not gives you Discover gives you a credit card because you do not have a credit score, you are just new. Maybe some banks also do that, but it is very rare. Most of them do not give credit cards to first time users. For Discover Bank can give you it's like the first credit card students have. So Discover can give you a credit card even if you are new in the United States. So subsequently, when you've used Discover for a while and you have what is called a credit score, then other banks can decide to give you a credit card. Was I able to answer your question?
Yes, that has answered the question.
Thank you
Thanks.
so much. So I'll be explaining the credit score system. Hamza, please can you mute your mic? Thank you. So I'll be going to the credit score system. So this credit score is like a score that just tells you, it's just a score that basically says this is the this is how good you are with making your payment on time. So from here, there is the fare. The fare is like the very poor is like 300 to 579, and you would be shocked that so many people are within. Yes, they say like 16%, but unfortunately, especially with this pandemic, so many people like are within this range, I would say. But for the most part, if you are starting, it's not like if you are getting a credit card for the first time, you are not starting from 300 or 579. Usually you are within the range of fare, even though you are having the card for the first time. So this fare is this the score ranges from 580 to 669. For good is like 670 to 739, and very good 740 to 799, exceptional 800 to 850. Some cards do not have up to the 800, 850 mark, I believe. But for the most part, if your credit score is anything from 690 to 7 something is okay. So you don't have to, it's not a score you'll be checking every day. It's not that important, because if you do what you're supposed to do, you don't have to bother. Your credit score will be good. So okay, they said 67% of Americans have a good FICO score. Yes, so this score I'm showing you now is called a FICO score, but there are also other scores that are used to measure. But this is like the one most companies use. This is like, let me just say, like maybe the most common score. Does anybody have any question about credit score before I go further? Finny, Sister Test name Hamza, does any of you have like questions?
No, you can go ahead.
Okay, Hamza, do you have a question?
No, I don't have a question now.
Okay,
Go ahead.
Sister Testing, what about you?
No, I don't.
Okay, so next, credit line is different from credit line available, and I would explain. So credit line, most commonly referred to as credit limits. So you would hear so many people saying credit limits. If you are getting a card for the first time, for Discover, I think the first time I had my card, I think my credit limit was it like 1,005? So basically, when you're applying for any credit card, they will ask you to input how much you earn in a year. So for most students in the United States, that it depends on where you are and your school, your program, etc. But usually it ranges from maybe let's say 15,000 to 30,000, 35,000. But for most people, it's usually between, let's say, 18,000 to, let's just say 18,000 to 30,000. Let's just stick with that. So if you tell them your salary in a year is $18,000, they will tell you to estimate the after-tax payment. So usually, for instance, if your salary is $22,000 before tax, after tax, you can have like $20,000 or $18,000. So if you tell them your salary in a year is $18,000, they kind of estimate that, okay, what payments would be convenient for you to make based on your salary. So I think for me, my first credit limit was 1,500. So that means at a time, for instance, now if I want to buy something, if I want to make a purchase worth $2,000, I cannot do that with my card because my credit limit is 1,005. So this is just see it as a debit card, like this is the maximum you can go at a point. So, for instance, now the example I have here, if my credit line is $1,000 and I make a purchase, I buy pizza worth $20. Now, my credit line available has reduced to $980, which means because I've made a purchase of $20, anything I have to buy now falls within this $980. Like it has to be this or lower. But your credit line is still the same. The limit you have is still the same, which means that if you buy the pizza today and decide to pay today, you decide to pay the $20 today, you can still make a purchase of $1,000. I don't know if you guys get what I'm trying to explain. Do you understand?
Yes.
Okay.
Yes, understood.
Okay. So your credit line is the same pending the time they decide to upgrade your credit line. But if you make a purchase, your credit line available will keep decreasing. For instance, if the purchase I made was $100, for instance, definitely my credit line available will be $900, which means I cannot say, oh, my credit line is $1,000. I should still be able to buy something worth $1,000. If I want to buy something worth my credit line and I've made a purchase, I have to pay for the purchase I made. And then after, maybe sometimes it takes a day or two, depending on the type of card. Then after then, you can then say, okay, you want to make a purchase of $1,000. Next. So this is just like different things that can cause you to do you guys have anything blocking your view, like the video blocking your view, or you can see the slide just fine?
I can see the slide.
Oh, okay.
It is
That's
fine.
okay.
Okay, that's
Nothing is blocking you.
oh, okay, that's good. So there are different things that can affect your credit score. So this green line is the one indicating the good side. Let's say a maximum of 850. And this 300 is like the lowest anybody can go. So they are just highlighting different things that can cause you to have a very low credit score. One, people with a low income. In America now, if you want to categorize students, they'll categorize us as like the lower income range, like not like we are poor, but that's like the category compared to people that are making so much money. To them, we are in that low income range. And because of this, so many people have their expenses exceeding what they can afford in a month. And as a result of that, they have a very low credit score. Another thing that can also cause you to have a low credit score is if you have a history of late payments. So if for any reason you miss a payment, yes, you accrue interest, you have to pay the money eventually, but it also affects your credit score, which means it takes a while for your credit score to build again, even if it's just one single late payment you make. And the definition of late payment is if they say your payment is due on so date, and at the very least, I don't want to make things complex yet, but let's just say that if they say your payment is due on, let's say, January 15th, and you do not make your payment at the time, you will have a late, that means your payment is late. So this is also one of the things that affects your credit score. Another thing is a new credit history. A new credit history is when you are seeking to get another credit card. At the moment, if you try to get another credit card in addition to the one you have, this would also affect your credit score, but it's usually not so bad. So if you know that you really need to get a new credit card, it's usually worth it. In a month or two, if you do the right things, you get your score back to your desired level. A high debt level, which is very, very obvious. For instance, if your credit line or your credit limit is $1,000 and you are owing $900 on that card, you're owing like 90% and you've not made your payment, that's a high debt level. Because to be honest, the credit card system is just like you're borrowing money from the bank. So if you have a high debt level, that would also cause your credit score to be on the lower side. Then things to do to make you have a great credit score. Make your payment on time. Do not try to, I would say the rule is to have a good credit score, make sure that what you're spending, that is what would be on your statement, what would be on your balance, should be within 10 to 30% of your credit limits. So that means even though your credit limit says you have $1,000, it would be advisable for you that maximally what you should spend in a month should be around $100 to $300. There is no rule to this thing. As time goes on, you'll be able to understand some rules you can forfeit. Like, this is not like you have to follow everything I say to the letter, but because you are still new and you don't know the system yet, that's why I'm explaining these things to you. So far, does anyone have any question? If not, I'm just going to go on to the next slide. So what is a statement balance? So to explain simply, a statement balance is the amount you spend in a billing cycle. So a billing cycle is like a month. And from the day after this billing cycle ends, you have at least 21 days from that day before your payment is due. So let's go to a real life example. For instance, your billing cycle doesn't have to be January 1 to February 1, or it does not have to be the beginning of the month. So for instance, if my billing cycle is October 23 to November 23, that means, and within this range, these days, I made these purchases. I bought pizza, I paid my phone bill, I paid my internet bill, I bought groceries, and my total came down to $200. So that means between October 23 and November 23, I spent $200. Your bank will send you a credit card statement saying that, Rahima, between October 23 to November 23, you spent so, but your payment due date will not be November 23. Your payment due date will at least be 21 days from the day the cycle ends. So in this example, if my billing cycle ended on November 23, if you add 21 days, which is usually referred to as the grace period, the period where you can also to get your money, if that makes sense, to get the money to pay back what you've bought. So November 23 plus 21 days, which is your grace period, we equal to, I don't know if I did this calculation right, but I guess so. We equal to December 14th. So this is your potential due date. This 21 days I mentioned, it varies from bank to bank. For some banks it's 25, for some banks is 28, depending. But at least you would have 21 days from the day your cycle ends. So this means that anything you buy between October 23 and November 23, you have to make the payment on or before December 14th. Does that make sense?
Yes, it does.
It makes
Billing
sense.
cycle.
Okay. Now, that is the definition of statement balance. So this statement balance is once you get your credit card statement, before you even look at anything else, the most important things is what is your statement balance, and two, when is your due date? So if your statement balance is $300 and your due date is January 30, so you know that in simple terms, you have to pay $300 on or before January 30 if you do not want to accrue any interest. Next, current balance. So now before I said that October 23 to November 23 is a billing cycle, right? But the question comes that what happens to the purchase you make after a billing cycle ends? So now, October 23 to November 23, my credit card bank will tell me that this is the $200 I owe them for this billing cycle. But what if it's not like then after November 23, I cannot use my card. No, you can still use your card after your billing cycle ends. But whatever you buy after November 23, and the billing cycle continues. So the first one is October 23 to November 23. Your next billing cycle will be November 24 to October 24, and it goes on and on like that. So whatever you make after your billing cycle ends, it just doesn't disappear. You still hold them the money. But this money is not added to your statement balance, which means that your statement balance does not increase. Your statement balance just signifies the money you owe in a billing cycle. But what indicates the money you owe totally, maybe after, within, before your billing cycle, is what is called your current balance. So for instance now, if your bank tells you owe $200 and you've put that at the back of your mind, but then you still need to make maybe purchases. These purchases are just added to your current balance. And for some people, it is advisable, if you can afford it, you can pay more than your statement balance if you want to, but never ever pay below your statement balance. I would explain some terms in a while. I don't want to make this complex, but if your current, you cannot save money with your credit card. You have to pay exactly what you owe. So if you don't want to accrue interest, you can either pay the $200, which is your statement balance, or if you have extra money in your bank account, you can say, okay, since your due date is December 14, on December 14, you can decide to make you can decide to pay for all the things you bought after your billing cycle ends. I don't know if that makes sense. Does anyone have any question before I go further?
No, no
It's all
question.
good. It's all good.
Okay.
So, hi.
Hi.
So, if I understand correctly,
Mm-hmm.
the extra money that you have aside your statement balance,
Mm-hmm.
which is part of your next billing cycle.
Exactly.
Okay.
Yes, it's part
Okay.
of your next billing cycle. But if you have extra money in your account, you can decide to pay it off at the time you are making your statement balance. So if, for instance, now this is $200, at the time when I'm making my balance, I can decide to pay the $280 so that my balance should be $0.
Dollars. But then, your credit card, your credit line available would still show that you have bought something worth $80 for that billing cycle.
So your once you make the payment, your balance will be $0. So anything you buy within that billing cycle, it will be indicated that you bought so, but they will also put minus $80. Does that make sense? So
Yes.
whatever you buy in that billing cycle might appear on your statement, but they will indicate that you already made that payment.
Okay.
So it's any other thing you buy after you make all this payment that can now show. Do you get? For
Yeah.
some people, the way they use their credit card is they buy something today, maybe 3 days after they just pay it off. With time, you get to understand what works for you, what would not land you in trouble. With time, as time goes on, you begin to understand what is the best habit for you to form as regards making payments on your credit card.
Okay. Thank you.
Welcome. So next, minimum payment deal. Okay. So number one, I would just want to say that the way people who immigrate to the United States, the way they use their credit card is different than people who have been here. So the average, okay, let me just like they say like the average American family does not have $500 saved for an emergency. And it will shock you that these people, if you meet them, they have beautiful cars, beautiful homes, everything appears blink, blink, blink. But the American system works on a credit card. So even when people cannot afford something, they still get it, right? But something about minimum payment due is the bank is just telling you, even if you cannot afford everything you owe us, this one, you just have to pay it. So usually, for instance, it's always very, very small. Minimum payment due is usually between maybe $35 to $50, even if you are owing a lot of money. And the reason is if you pay just the minimum payment due, which is that money that would not allow you to have a late fee. So late fee is you cannot afford to pay everything you owe, but you didn't make the minimum payment you're supposed to make. You will still get interest on the money you haven't paid. But late fee is that an extra an extra charge that you will get on your statement that even though you could not pay everything you owe us, you still refused to pay the minimum payment. So here I said good news and bad news. So minimum payment has its own advantages. For instance, if you are getting a credit card for the first time, there's something called 0% APR. So APR is annual percentage rates. So when you're getting your credit card, they might tell you that you have 0% APR for so months. You get. So if, for instance, now you get a card and they tell you that you have 0% APR for 6 months, what this means is you don't have to pay everything you owe them within that month. As long as you pay the minimum payment due, you are good. Does that make sense? I'm waiting for you guys to talk.
Yes,
Yeah, it makes sense. Yeah.
Okay. So when you are getting your card for the first time, if they tell you you have 0% APR for 6 months, that means, yes, your credit limit, for instance, your credit limit is $1,000. You've spent $300. They will tell you your minimum payment is $50. So that means as long as you make that $50, you will not accrue any interest or you will not have any late fees. But otherwise, if you know that your 0% APR your 0% APR window has expired, always make sure to pay your full statement balance to avoid any interest. Like I said before, if you spend $1,000 without paying and you just pay the minimum payments, even though you know that you are not within that window where you are free to make the minimum payment, if you do that, by the time you are trying to pay that money, they would have added at least 20 to 30% plus what you owe. So that means if you are owing $1,000, they can add $300 to that money. So you have $1,300 you have to pay. So next, late fees. Like I said before, if the payment you make is below your minimum payment due, a late fee is added to your account aside the interest accrued. So how do you avoid late fees? At the very least, which I would not even advise, if you are not within that window where you are free to, make just the minimum payments without accruing interest, at the very least, even if you cannot afford to pay your minimum payment due, please if you cannot afford to pay your full statement balance, please pay your minimum payment due so that you do not accrue what is called a late fee. Next, payment due dates. I've talked about this before. This is the most important date on your card. This is the date of accounting. All payments should be made on or before this date. Otherwise, you accrue interest on your credit card. How do you avoid missing payment dates? So I don't have nobody has time to be policing when will my payment date end or anything. So what you can do is you can set up automatic payments. So automatic payment, the way you set it up is you link up your credit card, is just giving your credit card the permission to your debit card that on or before your due date, you have the luxury to choose when exactly you want the payment to be made. So once you set automatic payments, your credit card automatically takes the money you owe from your bank. That does not mean if you remember. I have automatic payments set up, but usually I make all my payments myself because it just makes sense if I'm trying to know how much do I have left in my account rather than waiting for the banks to remove the money themselves. So another thing about automatic payments is ensure your bank account has enough funds. You cannot set up automatic payments and then you are broke and the credit card went to your bank account and they realize that this guy does not have money. It will put you in trouble. Number one, if your account balance in your bank account, when I say bank account, I mean your debit, if it is lower than what you owe, for instance, what is in your bank account is $200. You are owing your credit card $500. They got there and realized that you don't have any money. What they do, depending on the type of bank you have, in some banks, they will give you overdraft, which means some banks can say for instance, the overdraft is $200. That means if you make any purchase, you can make any purchase above what you have as long as it does not exceed $200. But they will charge you for overdraft. Overdraft just means it's just like how the name, like you've done over what you can afford, right? For some banks, transaction will not even go. Once they realize that the money you have in your bank account is not enough to pay your credit card, they will just cancel the transaction. But your credit card did not say, "Oh, let's leave this girl alone, she's broke." No, your credit card, number one, they will charge you that you wasted their time. That you wasted their time. They went to your bank, they did not see the appropriate amount of money there. Then at the end of the day, this unpaid balance you also equal interest. So for almost for every rule you miss, for everything you don't do right, you will accrue interest on your credit card. Next, annual percentage rate. I've talked about this. This is the interest placed on your account if you do not pay your full statement balance. Always pay your full statement balance if you know you are not within that window where you have 0% APR. If you are on 0% APR, as long as you pay the minimum payment due, you're good. Otherwise, interest, which is about 25 to 30%. Next, cashback or reward. So this is where people get into trouble. Almost every bank has what is called cashback, which means they give you money if you spend. So it's usually between 1 to 5% of purchases, depending on the card. There's no rule. Some cards are maybe 10%, 50%. It depends, but usually it's always within 1 to 3%, to be honest. Some have different percent for different purchases. For some cards, they will tell you if you buy grocery at Walmart, you get 1%. If you buy grocery at Kroger, I don't know if you're like, if you buy some, it just depends on, some cards give you different percentages for different purchases. For instance, now, if you spend $500, they will say, okay, take 1% bank. It's like, thank you for using your card. And they will give you $5. Yes, if you are making a lot of purchases, this small money can add up, and you can use it to, make extra purchases. But it is not worth using your credit card to buy what you don't need just because you want to rack up cash back, because this money does not make sense compared to what you would have spent, and you would have put yourself in debt. So that's something people do. They try to, some people try to get enough or a lot of cash back, and then they go ahead making purchases, buying things they don't need just because they want this small money to accumulate. So it does not make sense. Yes, this money adds up in a while, but it is not worth making unnecessary purchases over. Does that make sense? Does anyone have any question? Okay, thank you.
Yeah, it does. No question.
Okay. So next, fees and interest, as I said before, avoid. You don't want to be in this category. There is no reason why you should pay your credit card money you do not owe. So avoid interest and fees. Avoid interest and fees. Always pay your balance in full. For me now, this year, I've decided to stick to my debit card for most purchases to avoid accumulating debt. I just realized that it is easier for me. Yes, the longer you stay in America, the more the things you need to buy increases. For instance, when I first came, I didn't have a car, so I didn't have to pay insurance. I didn't have to pay for gas. I didn't have to pay for something happened to my car, all that. But now, my credit card is mainly for automatic payments. So for things that they'll be billing me every month, I don't have the time or luxury to be making those payments every month. So I just automated all my payments. Netflix, money for my car insurance, money for my phone, Amazon, all those money that is just monthly you have to pay. I just made them automatic. And at the end of the month, I go there, wherever I owe, I pay. So I prefer that for groceries, for things I know that I need, I eat. I just prefer to spend my debit card. Moreover, I'm in the United States. Payments using your debit card is safe. So there's nothing about that. Then buy only what you need. Credit card is very tempting, to be honest. You don't have the money in your bank account, but you feel, oh, you can just buy and pay later. The best way to have peace of mind in this country, if you cannot afford something, please, you don't have to buy it. The only exceptions come for things like things you really need. Like if you are coming into a new country, there is a high probability that you need a better laptop, you need a better phone. These are things that are very important that would help you in school. For those things, if you cannot afford to pay on a go, most of the companies have like monthly payments to make. For instance, I bought my laptop for $1,000 with Apple, and they said I can pay within a year. So they gave me the 12-month grace with no interest. I don't deal with interest. I don't have anything to. If you want me to make monthly payments, you cannot add even a single cent to it. That is me. So that does not mean that if you want to make big purchases, you have to go out of your way and stress yourself. No. You can have like a monthly payment plan as long as you do not have interest on it. And I've said this before, do not be lured into accumulating rewards. The money is very small at the end of the day, and it is not worth increasing the money you hold just because you want $2 here and there. So it is not necessary. So this is just to show you how a credit card statement looks like. So I'm just going to be making this a bit larger. Can you guys see? So now this is a credit card statement owned by Discover. So they said the account number ending. I think someone is unmuted. Hi, if you are just joining, please kindly mute. Thank you so much. So this is an account. This is a statement account by somebody we don't know. The on the right hand side here we see the account number ending in so, open date so, close date so. Like I said before, this is the billing cycle. This is the billing cycle. So card member since 2008, indicating that is the time the person has joined. And this is page 1 of 4. Yes, credit card can sometimes go even 6-7 pages of statement. In America, you will read a lot of things. So account summary. Previous balance. This person was owing $6,770 before. Again, this should never be you. This can never be you. This is just an example. The previous balance of the person is $6,770. The payment the person made is 5,000 so. And then the person, like Sister Taslim was asking before. So if maybe the person made a payment at any point in time, see this minus sign here, we indicate that is the amount the person has made. So this previous balance, the payment the person made, so the person could not afford to pay everything he owed. So he made this payment. Then purchases, this is what the person spent within that billing cycle. Balance transfer, what some people do. That is why I'm saying credit card is not complex. But if you want to make it complex for yourself, there are different mistakes you can make. What do some people do? And usually it's Americans that do this. So if they owe on one credit card, they can open another credit card and transfer what they owe on one card to another. Again, this is never a good thing to do. Always buy whatever you can afford. Yes, this is America, but there is nothing that stops you from sticking to the if you don't have it, don't buy it system we have back in Africa. So cash advances. Some people borrow money from their credit card. Yes, it is possible. Like down here, you see that they wrote cash advance credit line. So this person's credit line is 8,900. This is the maximum the person can spend at a time without making any payments. The credit line available, this is the amount the person can spend now because the person has made some payments before, if that makes sense. Cash advance credit line. Cash advance is people that borrow money from their credit card, which is not a very wise thing to do because at least they will put like 30% on the money. Cash advance credit line available. The reason why this person has the same is because the person has not borrowed money from their credit cards. And then this is the FICO score. The FICO score is, I don't know if it's FICO or FICO, whatever, it doesn't matter. So the FICO score is 766 for this person, which is very good. And they will write that the FICO credit score as at this particular date. So next, Does everybody understand what I just explained? Do you have any questions before I go into the next column? Okay, I'm just going to continue. So now, this person's new balance. This person's new balance is 943.21. The minimum payment due is $35. Like I said before, the minimum payment is usually very small. And because if you pay just the minimum payments, if for instance, if you deduct $35 from this, the person has about $908 left. That means they will be charging you 30% interest on that money. So it is an advantage for them if you make just the minimum payment without paying your statement balance in full. This person's payment due date is December 18. So now if I get my card, yes, I go through this to make sure that I don't have any strange purchase. But usually what I need to know is my balance and when the balance is due. Late payment warning. Like I said before, late payment is different from the money you... Late payment is different from you did not make any payment at all. So if they say your minimum payment is due, and it is $35. If you do not make these minimum payments, I'm just going to be reading this out. If we do not receive your minimum payment by the date listed above, you may have to pay a late fee of up to $35, and your purchase and balance transfer APRs, which is annual percentage rate, for new transactions may be increased up to the penalty APR of 24.99%. So they are saying if someone cannot afford to pay their balance, and they did not try to pay the minimum payment due, a late fee of $35 will be added. And aside that, the subsequent interest the person will accrue on the account will be increased. So minimum payment warning. This is different from late payment. Late payment is you did not make the minimum payment. Minimum payment warning is to tell you that if you make only the minimum payment, for instance, if this person thinks, oh, I'm owing $943, I'm not going to pay it. I'm just going to pay $35 so that I don't get the late payment warning. But this is the minimum payment warning. If you make only the minimum payments, or as a matter of fact, anything less than the balance you have, you will pay more in interest and it will take you longer to pay off your balance. And they will just give you an estimate that, oh, if you continue making only the minimum payments, you'll pay off the balance on your card for 3 years and you end up paying so you don't have any business here, because this should never be you. Rewards, cashback bonus, like I said before, you can have like 1% to 3% on every purchase you make. So at the end of the day, like this person now earned $11. But before he was able to earn $11, see what he has on his card, 943. Yes, $11 might seem like, oh, it's racking up, but it does not make sense to use your credit card just because of one small money. Like the money is too small for you to be making unnecessary purchase for. So next, they will tell you you can pay online or pay by phone if you have. So usually when you get a credit card, you go to App Store or Google Play Store, you download the app. So you can always pay online. You don't have to pay by phone, if that makes sense. So here is just the most important thing the person needs to know: the account number, the minimum payment due, when it is due, the balance the person has. So I think that's it. So for the next slide, this is the slide where they kind of explain in total, and it's advisable that once in a while, or it's advisable that you go through this, because sometimes you never know, some payments can be strange. Some companies can charge you twice for any reason, maybe a mistake or whatever. So this is always it's always advisable to go through your transactions. This person now, for instance, total fees charged in 2014. This is the interest the person has made in 2014. This should never be you. Your total fees charged or interest charged should always be $0, because you buy only what you need and you make sure you make your payment on time. So now the question comes, what if, I'm going to be reducing this and going back. What if you are broke? Because in America, nobody borrows anybody money, because nobody has money in America. Everybody is using the credit card system. So people buy what they cannot afford. So what happens if you are broke? So there's one thing I do if I'm broke, like that's the last resort. So I don't know if all of you know about Cash App. Cash App is like how you send money to people in America. Have everybody heard about Cash App? I'm waiting for you guys to talk.
Yeah, there's a new song back in Nigeria.
Yeah, I know about Cash App. So there's a new song.
This is not the Cash App. So Cash App, okay, this song actually makes sense based on how Cash App works. You Cash App, okay, Cash.
Yeah.
Yeah, this song actually makes sense based on how Cash App works. But Cash App is just how you send money to people here. So for instance, now you don't have money and you don't want to pay. Okay, let me just use the example I've written here. Someone has a credit limit of $1,000. The person is owing the credit card bank $500, but the person is broke. This person only has $300 in their bank account. Now, if they say they just only want to make this $300 payment, they will accrue interest on that $200, which can be like 30% and blah, blah, blah. They don't want to do that. So one thing I want to let you know is in this scenario now, the person has a statement balance of $500. If the person has not made any purchase after, that means the person still has $500 they can spend. Does that make sense? So from the $500 they can spend, this person can decide to send, okay, what the person only need actually, see, I have $200 short of my credit card balance. What should I do? What the person can do is they can send $200 to their friend using their credit card. So Cash App allows you to send money whether using your credit card or debit card. So if you are broke, you can send money to somebody using your credit card and Cash App will charge you 3% interest. For instance, if you want to send $300, Cash App will charge you 3%. And then at the end of the day, 309 will appear on your card. So if you send this money to your friend, the person will not cash out the money. Once they receive the money, the person sends it back to you. So it's like it's sending in and sending back. The reason why you're sending the person money is not because the person is asking you for money. The reason why you're sending the person money is you want the money to come out of your credit card, send it to the person, and if the person sends it back to you, you can cash out this money into your own bank account. So that means now your credit card will read that as you made a purchase of $200, but you have that $200 in your bank account. Does that make sense? Does this sound confusing? Does any?
Yeah, not as straightforward as the song. Maybe a little more explanation.
Okay, so this is it. Now, you are broke. Let's just even forget about this scenario. But the thing is, you are broke. You need $200. And on your credit card, you still have enough money. Like, you still have enough money to make a purchase, right? For this person now, they already made a purchase of $500. So they have like $500 left, right? And in their, let's just say like this person is broke and they need $200 fast. Number one thing, the way this trick works is you are sending money to somebody and the person is sending you money back. So the question is, why do I have to send money to someone and the person sends the money to me back? So because you can use your credit card to send money to this person, so you are not removing money from your bank account, you are removing money from your credit card. You send it to the person. When the person sends that money back to you, you can cash this money out in your own bank account. So that means though you sent the money to this person using your credit card, if the person sent the money back to you, the money goes into your own bank account. So now on your credit card, it will be there that, oh, you bought so of $200, but actually you didn't buy anything. You just used that to send money to your friend. Your friend sends this money back to you, and then you have $200 in your bank account. Does that make sense? Is it better or?
So in this scenario,
Okay, so it makes sense.
Okay.
But does that mean your statement balance will now be 700? Yeah.
Exactly.
Okay.
so how does that help?
The way it helps is that addition of $200 will not be in the current billing cycle.
Oh, okay.
You get, it's not in the current billing cycle, so you will deal with it the next billing cycle.
Oh, that
You
makes
get,
sense.
that makes sense. Does anybody still have questions? Like I totally understand.
Okay, yeah, that makes sense.
Exactly. So your statement balance is $500. So the $200 they are saying, yes, it will be part of your current balance, but it is not in your statement balance. So with that $200, they can add it to the $300 they had before. Make your full statement balance have no interest. But now the current balance on your card will now be two. If you send $300 and Cash App charges you 3%, so the current balance on your card will now be 310, right? So the only interest you have now is like 3%, which is so much better than 30% on $500. Does that make sense?
Yes.
Does anyone have any question? Monir, do you understand now? Or do you want me to go over some things over again?
Yeah, yeah, I understand quite a bit. I think I missed a large chunk of
Yeah,
what you were saying.
I'll try.
I came a little bit late.
It's okay. I'll try to upload this on my YouTube channel, so you can always go back to see. Hafiz, do you have any question you would like me to answer? Hafiz, are you there? Hamza, do you have any question you would like me to answer? So this is the last slide.
Yay.
Yay! This is the last slide, but if you guys have like any question you want me to, any part you do not understand and you want me to go over, I would gladly do that.
All right, let me ask this question.
Okay.
If getting my credit card
Mm-hmm.
for the first time,
Okay.
how much do I need to deposit before I begin to make serious transactions?
Mm. Are you asking like what's the maximum you can spend on your card? Is that what you're asking?
No, like I don't. Okay, like if I got an ATM card in Nigeria, for
Okay.
example,
Okay.
I will be needed to have some money there. You
Oh,
get like you don't leave an empty account. Some banks do that. So I want to know if that's the same system here.
oh no, that's not how a credit card works. So when you're getting a credit card for the first time, what they would do is they'll give you a maximum amount you can spend. Please can you mute your mic? Eh, let me see. Okay, thank you. So the
I
way
was mute.
Oh, okay. Okay, thank you. So the way a credit card works is once you get the credit card, they will just tell you this is the maximum you can spend. Whether you spend it or not, it does not. Whether you accrue in, whether you buy anything or not, it does not affect it. So it's not like a debit card in Nigeria where they will tell you you cannot leave an empty bank account, you cannot have an empty whatever. But here, it doesn't matter whether it's empty or not. Just once you get your card, you can decide whether you want to make a purchase or you don't want to, if that makes sense. Monir, is that clear?
Yeah, that makes sense. Now the maximum part.
Mm-hmm.
So like a little bit of explanation on that.
Oh, okay.
Like what you get what I'm saying, right?
Yes, I get it. So the maximum part. So when you're applying for a credit card, they would ask you for your salary. So that is how they decide, oh, if they give you this maximum, it should be easy enough for you to pay. So if you say your salary is $20,000 after tax, they can say, okay, we'll make your maximum in a month $1,000. So that is what the maximum means. So this is, like I said, it's called a credit limit. Like this is the maximum you can spend without making any payment. So I know like you will have like a lot of questions, but what I would say is I'll go ahead and upload this in on my YouTube channel. If you watch the video and then you have any more questions, then you can contact me later and I'll try to explain as much as I can.
Yeah, that makes sense. Thanks so much.
Welcome. Does anyone have any other question?
Okay.
Yes.
I think this has really been okay. Go ahead.
Okay, so how do we get a credit card?
Oh, okay. So for I'll be sending you a link.
Okay.
Yeah, I'll be sending you a link so that way like it's very easy. So you just go through the application, they will ask you to put in some information and within 3 to 5 days you should get your card.
Okay, so someone was telling me that she is ready to refer me. Is
Oh,
that easier? Will that
yeah.
be
The
easier
thing
for me?
about referral is okay, if I refer you, I will get $50, you get $50.
Okay.
So it's just like a point.
Please, can you refer me and pay me your $50? It's not your credit card, it's mine.
That the $50 is not a payment, is it?
No, it's not a payment. They will give you the money. Like, how do I say it?
Is part of your credit line.
Yeah, okay, this is how it works. So for we that we've already had we already have the card. The money will be in my cash, my reward.
Okay.
It will just be under my reward, and I can do whatever I want with it. Some credit cards allow you to buy directly from Amazon. Some allow you to pay your credit card debt from that. So there are different options that. So it will be under your cashback or reward column.
Okay. Also for me.
Yeah, also for you. So that's it. There's a card I have, American Express. If I refer somebody, they give me 150. They give me $150 or $100. So it's always good to refer. It's just like a point system. You get money, the person also gets money. And it's
That
easier
works.
than because even though I said okay, there are different types of cards. There's Discover, American Express. There are like different types of Discover cards. So for some people, for some card, the card is just for flights. Like if someone that flies a lot, so you have to know which one you're applying for. That is where referral is better because you are sure that this is the exact link. If you go online now, you see like tens of Discover cards, and you'll be like, which one am I going to take? So that's why referring is also easier.
Okay. Thank you.
You're welcome. Yeah, Hamza. Hi, Hamza. Are you there? You were about to say something.
Okay, I'm here.
Oh, okay.
I was going to ask if some of the banks have their own credit cards, or it's just like the credit cards companies are also standalone, and they are in a partnership with your bank to provide you with whatever service you need, or some of the banks have their own credit cards, so that kind of connection between bank and credit card wouldn't be there.
Oh,
Or
okay.
I hope this is understood.
Thank you. Thank you so much for that question. So, for instance, now a bank like Chase is a real bank, like you can have. Hamza, please mute your mic. Thank you. So Chase is a real bank, like where you put your money, like the Nigerian, like the African system. But they also have a credit card. I think almost all banks have a credit card. But I think for Discover, I think Discover is mainly, I think there are some banks that the only thing they do is credit card, if that makes sense. For Discover, I think Discover is mainly a credit card system. But in America, so everything is about level, it's about where you are. So you can say Discover is a credit card company, but some rich people, that might be the bank they use. So in America, it will always be clear. You shall always know that this is the level where you are. The opportunities you have, the things you can access is just always different depending on the level. So Bank of America is a real bank. MasterCard and Visa, those are like card systems. So MasterCard is not a bank, right? MasterCard is like they make cards. So many banks have a MasterCard credit card. So it will bear their name as so bank, but the card is for MasterCard, if that makes sense. So, but I get your question. Usually the credit cards that are tied to banks, they usually don't have enough rewards, so to say. So it depends. For instance, now I have a bank called US Bank, and they have a credit card. The credit card does not have anything special on it. There's no, even the reward itself is very small, it's useless. So, but for Discover now, for some cards that are known for, okay, credit card is what we do. You have different incentives, different things that can help you. So it depends. Some banks, they are both banks and credit cards. Some are just credit cards, but this is not, don't be surprised if you go online and you see something different, depending on the level where you are, if you are working, if you are rich. So there are just different opportunities. So does that answer your question, Hamza? Oh, okay. Does anyone have any question? Thank you so much, guys, for being here. I would have been talking to myself a lot. Thank you so much for being here. Does anyone have any question?
Yeah, sorry, let me just come in. Yeah, if you were to recommend, like I have a lot of lists here, these types of credit cards. So if you were to just recommend one, based on, you say it's based on level. So the level, based on my own level, what would you recommend?
Oh, okay. So for students, Discover is our best friend. Discover is the non-judgy card. They know that these people are just coming in. You should not stress them. So if you apply to any other card, they will do you bad boost. They will say, sorry, try again later. But for Discover will give you a credit card, even though you've not been here before, you don't have any credit score or anything. So the first card for most students is usually Discover. So then afterwards, as you use your cards, you have a credit score. Then the best card so far that I'll say is American Express, because American Express has more advantages, because even after, I don't want to make it complex, but Discover is the best card for students. Is actually the only card that will give you. So whether it's best or not, I mean, they have, like, for the first 6 months, you have 0% APR. I've explained all of that before. When you watch the video, I hope you understand better. But if you do not, you can always contact me and then I'll explain more. But Discover is your go-to card if you're new in the United States. Does that make sense?
Yeah, it does. Thank you.
Anyone have any question?
Yes, one more question.
Oh, okay.
So if I don't use my credit card in, like, say 3 months, how does that affect my credit score?
Well, it depends. So usually, if you don't use a credit card at all, and they everything, your statement balance is always 000, they will just assume that you are not using the card. Your credit score might not be affected a lot. Even if it be affected, it might be 2 points or 3 points. But I think there is a limit where they will close the card. Like, I don't know, it depends on the bank, but at the very least, even if it's $1, just definitely you are here. There will be a lot of things you need to buy, right? But even I have a card that I've not used for how many months now. It does not affect anything. It's not like you have to buy something. If you don't buy, see, credit score is good for people. Let me say it's good for people that want to borrow something. For now, okay, I never even got to talk about this. So in America, most things run on credit. For instance, now, like, when you guys are spend maybe after your first semester, you start to realize that yes, you do need to get a car and stuff like that. So for most people, they want to, like, get a car from a dealer where they will tell you buy and pay monthly. So it's for all those kind of things where having a very, very good credit score helps, because with a great credit score, they can say, oh, your interest will be lower. But I would never ever recommend that you buy a car on credit. Cars are not really expensive here. If you have, like, sometimes even less than, some people even buy a car of $900. It depends on the type of car you want. You don't have to stress yourself about it. If it's $900 car you can afford, buy it once and for all, forget it. As for all this buy now pay later system, I'll tell you, as much as possible, avoid it, because at the end of the day, you get into a lot of trouble. And like I said before, this year now, me and my debit card, we are friends. If I need to buy anything at any store, I just use my debit card. But for things that are automatic, like I know it's every month, those are the things I use my credit card for. Yeah.
Thank you.
But there's a debit card too.
Yeah, definitely. Like we have in Africa, you can always get debit card. The only thing about debit card is if you buy, nobody will reward you for buying anything on like credit card. But as much as possible, it's not like it is impossible to live just on a debit card. It's just that because of the score, you are here, you are in the system. Sometimes you want to make purchases and you don't really have the money at the moment. You're waiting for your next salary. So that's why credit card is advisable for, but for date, it takes time. You can start using your credit card and see, because the thing about the system works is, so when I get my salary now, I have to pay the money I've spent before. So that's why is very, people live paycheck to paycheck, because before the money comes, you've already spent it. So if you realize that you don't like out the fact that when you get your salary, the money is not even for you, you have to pay your credit card first and then pay a lot of things. You can decide that you just use your debit card to buy something. Buy only what you can afford, you know. You don't have to stress yourself. So that means when your salary comes, what will be on your credit card can even be less than $100 and it won't affect you. Do you get what I'm saying? So nobody gets, it's not a crime to use a debit card in America. If you're using a debit card, people will say, "Oh, you know, you will get reward 1%." Don't Those things doesn't matter to you. If a debit card puts you on check and it does not put you in debt, then please, you don't have to necessarily use your credit card. But for things like phone bill, which you cannot avoid, for things that are just like monthly, then a debit card is like good for that. And another thing, if you're sending money to Africa, don't use your credit card to send money. If you don't have money in your bank account to send, don't say that mommy is something say say I just send money. You know, it's a credit card. No, if you don't have the money in your bank account, don't ever use your credit card. You send money to people when you have more than enough, right? Or maybe actually, you know, you can never have more than enough. But what I'm just saying is, if you don't have the money in your bank account, don't use your credit card to send money to people. So that's that about that. Does anybody have any other questions?
So, what is the best way to send money to someone in Africa?
Okay, before pandemic happened, it was Sendwave that I was using. But with this no, before Naira got points. So now that everything has scattered, the Sendwave system is very difficult. So what I use now is Boss Revolution. So that's what I use. And for Boss Revolution, I think you can even like recharge for people back home. You can call using the app. You can also send money, but it's kind of slow. Sometimes it takes 30 minutes to an hour for them to get it. Whereas for Sendwave, it was like 3 minutes. The person had received the money. So but now what I use is Boss Revolution. Is what I use.
Can you put that in chat, please?
Yeah, sure, definitely. Right, okay. Oh, someone was asking my YouTube. My YouTube channel is my name. Let me see. So Boss Revolution, and they have two apps. One is the calling app, and one is the one for sending money. So just make sure you are downloading the right app. My YouTube channel is just my name. The content I have there is not related to credit card anyway, but I will just be using that to get you access to that. Does
You
anyone?
have to get the people in Africa, they have to download the app before they receive the money you send to them.
No. It goes directly into their bank account. They don't have to download any app.
And you're not paying
Not just
like charges for that.
no charges for them. No charges for them.
Fantastic.
Yeah, the charges can be on you for like may I ask to pay for Sendwave. Sendwave had no charge, which is why I liked it. Though even though the rates might be small, might be lower than others, but it had no charge. But for Boss Revolution, sometimes it's like $3, $5. It depends on it depends on it depends on how much you're sending, but it's not too high. Like it's very, very, very small. So yeah, I think we'll now be drawing the curtain.